What's up, everybody? Take two of this janky video. It better be useful for most of you, or hopefully it will be, but I just spent the past 30 minutes talking to myself, not recording any of it. So I will try to make this even shorter than the last version, just so you won't get bored with watching and listening to it. Okay, so we just wanted to do a quick overview of the Keltner Channel, indicators that I use to trade, and then big picture, what I use to enter and exit, what cues I use to enter and exit my trades. So in the chat over the weekend, we talked about this new indicator that I've been using for maybe a few months, but it's probably new to most of you, and it's called the Keltner Channel, and you can see it outlined here in green, and it's essentially a true range of price action off of this moving average. So you can set the moving average that you want to key off of to whatever you are accustomed to using. So if you use the 20 moving average as your main moving average to monitor the price action, then you can set up the KC. I'm just going to call it KC for now. You can set up the KC for using the 20 moving average. I use the 21, and so I set it up for 21. If you use the 50 moving average, whatever you typically use, you can have this range calculated off of that moving average. So in Webull, at least, you go to the indicators, click on edit, and then Keltner Channel. Again, 21 moving average is what I use. You can set it to what you typically use. 2 ATR. So typically 2 times the average range is pretty much going to be the full range of price action that you see. Some people use 3 ATR, but that gets to be kind of far away. And so you're less likely to be pivoting off of prices that are that far away. And so, experiment with it, play around with it. Just set it for 2 initially, and then you can see how the price action moves with respect to that. And then if you want to tweak it later on, feel free. Okay, so you can set the color here. Because I already have the 21 moving average on my chart, I just deselect the midpoint, and so I don't have it visible. If I didn't, it would just be the exact same line that you see already plotted here. So I don't need it since I already have it on the chart. And then I make the upper and lower bands the same color. You can make them different colors if you want to distinguish between the upper and lower. I want to see the price action within that range, and so I just make them all the same color. So this is similar with the Bollinger Bands. If you're familiar with Bollinger Bands use standard deviations, so 1, 2, 3 standard deviations from the mean or the average. You can use those if you're more comfortable with that. But the Keltner Channel just use the average true range instead. So how far is the price action moving off of the moving average to the upside, to the downside, and that defines the range. That's pretty much it. So why do I even have it on the chart? So if you look at this, you can see that when the price action moves closer to those bands, then something happens, and that something is usually a reversal. And so this is all today's price action on this 5-minute chart, and you can see at the open we pivoted to the downside, and once we started testing this lower range, look what happens. We pivot to the upside, push all the way up to the upper bound of this band, and what happens? The reverse happens. All right, so usually when you get around this area, You might get some candles that try and move outside of that zone, but for the most part, it's going to remain within that 2 ATR range. And so knowing that that's the case, then you can sort of time your trades based on when you're at those extremes. So for example, at the open, I took a trade here, not because we were close to the band, but because of other factors that we'll talk about later. I took a trade here, but once I got close to this lower band, then that tells me, hey, this price action is probably going to reverse soon. And so I want to lock in profit on my long puts. And so I usually look to exit those puts once I get close to this lower band. If you wanted to go long on calls, so same thing. Once that price action moves towards this lower band, you know it's going to reverse, or you can anticipate it's going to reverse. And so you can be just sort of sitting there waiting until that price action comes to that level, buy your calls, and then you can ride this price action up to this level. So now we're at the top of the band, and because we're at an extreme, it's just like we talked about. When you get to this area, you want to be paying attention because you can usually anticipate a reversal or pivot in the opposite direction. And so if you got in here with long calls, then this would be your exit. But then you can quickly shift focus because you know there's going to be pivot to the downside in price action. And so you can go long puts here. You can ride it down till you get close to this lower band. And then you can also use other factors like the MACD to say if you want to exit here or hold it for a little bit longer as this price continues to decrease. Okay, that's how I use the Keltner channels. If you don't trade SPY, it doesn't really matter. You can choose, really sort of any stock, and we can see what happens. So this is Tesla today. By the way, Tesla is one of the heavier weighted stocks within the S&P, and so that means that the price action on Tesla will look a lot like the S&P price action, and so, but we're just looking at the stock itself. And so let me just get rid of a couple things here real quick. This one still has the moving averages that I'm trying not to use anymore. So I got rid of the wrong one. Get rid of the 8 and the 34. So now it looks like the setup I had for SPY. Okay, so what are we looking at? So again, just like SPY, we see a big drop out of the open. Now this one actually breaks that lower band, but then look what happens once it gets a little bit beyond it. It snaps back up, and that's a big move to the upside. And so whereas SPY might have a true range of around 204, Tesla's range may be 4, 5, 6 times that. And so you see Tesla move from 757 all the way up to 790. And so if you get long calls here because you anticipate, hey, this is going to pivot back to the upside, I can just ride this price action back up, then that's a big move. So instead of 2 points on SPY or 4 points on SPY, then it might be 30 points on Tesla. So that's something to think about. Understanding the stock that you're trading. The concept works the same. It's just that the magnitude of the moves may be different depending on what stock you're trading. So same thing here. So we got here 790. Didn't quite make it up to the upper range. Tesla pulled back to the 21, and then guess what it did? It kept going, right? That where it got up to the range. And so that would be another opportunity on this pullback. If you missed this move from here to here, it's pullback to the 21. You saw it holding that area. You can go long calls here, ride it up here, and exit there. Then you look to do the reverse. So you can get long calls here because you can anticipate, hey, I'm at the upper bound of the Keltner channel. Now I just want to ride this price action back down through this pullback and just watch it continue to dip really down to this lowest level of the day, which, look, happens to be right at the level that it was earlier. Okay, so that's how you can use the Keltner channel to help you with your entries and exits. I would say, in addition to that, you might want to put the MACD, so the moving average convergence divergence indicator on your chart, and then just overall volume on the chart. So the way I use this MACD is I'm looking at the crossover points. So the MACD itself in this on this screen is gold, and the signal is blue. So I'm looking at the gold line to cross over the blue line. When that happens, I can anticipate some momentum in a direction, one or the other. So with this, let's just say out of the open, we see the gold line crossing below the signal line, and so that tells you, along with these red bars, that we're going to see a move to the downside. And so you see that corresponding with what the MACD is doing, and now this pivots and starts to move in the other direction. When it crosses over the signal, above it, then look what happens. So we get these nice green bars here on the histogram. We get these green bars here on the volume bars. And so that tells me, hey, I should be considering buying calls at that point. And then you see the big move to the upside that you see there. And so you can just sort of walk this throughout the day, watch what the MACD is doing, and then it crosses over again here to the downside, so below the signal line. Now we got red bars on the histogram, so that says, hey, this price is going to be dipping to the downside. And sure enough, in this area you see a bunch of red candles, and we see the price just sort of plummets, up from this level, 793, all the way down to 756. So just a big move there. And you don't even have to know how to chart support and resistance. You can just use these indicators, Keltner channel, the 21, MACD, and the volume, and you can do pretty good. I go a little bit beyond just using these and actually draw sort of these intraday support and resistance line. That just helps me to confirm key areas and pay attention to those areas in case I want to exit a trade, and just sort of lock in profit. Okay, so that's just random. Tesla, if you didn't trade SPY, you can just grab really any stock and just see how it performs relative to the KC. This is what is this? NVIDIA. So again, this is another S&P 500 stock that has a pretty good weighting within that stock. And so when you've got a heavy weight within that ETF, that means that the stock price action will largely look similar to how the S&P moves. Okay, so we saw earlier that the S&P at the open dipped and then had a big move to the upside, and then pulled back pretty much the rest of the day, and NVIDIA followed suit, Tesla followed suit. So yeah, just that's what I wanted to mention there. So let's just go back to SPY, because that's what I've been mainly focusing on with this new strategy. And most of you know that, most all of my trades prior to this downturn in the market were selling credit spreads. So I sell options, collect the credit up front, and then I let theta decay the value of those options for the people who are holding those as buyers. As the value decays for the buyer, I get to lock in more and more profit, and usually that is easier to do, but it had become a little bit difficult to do in this market with everything constantly moving to the downside. And so it's hard to sell puts when most of the trades are going against you as the seller. And so I had to find a different way to trade in this environment, and I just started and came up with this, using these indicators, figuring out when to go long puts, when to go long on calls, and keeping tight stops, keeping my risk minimal, and just sort of making, small gains. And eventually those small gains add up and become large gains, over the course of the day. Okay. So another thing I'll mention in terms of my setup. So what do I do? Where all these lines come from? So you see these dotted lines, these different colored lines. What do those represent? So first thing I do, either the night before or in the morning before the market opens, is just sort of try to get a picture indication of what the overall market looks like. And so I use SPY as a representation of what the market is going to do for the day. So I look at, what kind of trend we're in for SPY. And so you can see, since January, since the 1st of January, we've been in a downtrend. So we've been slowly moving down in terms of price on SPY. So from a high of 480 down to where we are today, so 418. So quite a big move over the past 3 months. Now there are some pivots, so you might get some green days in here where you move higher than the previous day's high, but you're still within this channel, and you're still respecting the direction. So I look at the direction. What direction are we in? What kind of news is out there that might give you some short-term change in direction that could turn into long-term change in direction? So Fed meetings on raising interest rates, or war in Ukraine. So all of those things sort of inject fear into the market, which causes what we see here. Supply chain issues, that just sort of has an effect on the market. And so overall, market is bearish in my opinion. And so I have profit targets. I have price targets on SPY to move from where we currently are to eventually down to this 395 level. It could go lower, may not make it there, but that's the mindset. So I'm looking at what is the overall market doing. I'm looking at this higher time frame, and then that sort of sets me in motion for how I want to trade either the ETF, either SPY itself, or any of the stocks that are making up the S&P 500. And then I just start working my way down. So I might go to the 1 hour chart or the 4 hour chart and take a look at that. Is it moving in the same direction as the daily chart? Are we in a downtrend on it? The 30-minute chart, same thing. And then I eventually end up where I am and where I trade from, which is the 5-minute chart. So I trade on the 5-minute chart. And so I come into that chart, maybe 20 minutes before the bell rings. And I want to look at, hey, what's this price action doing? Are there any key areas that I want to mark out as support and resistance? to help me with trades throughout the day. And so you can see this area here, right, where you're sort of choppy in this area. So I look at that area and say, okay, that's something I want to pay attention to after the bell. And then you can sort of see this trend from this high in pre-market of 425, and the price action starts topping out lower, 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 lower. And so the more of these candles that your trend line touches, then the more confidence you have in that becoming a support or resistance line. In this case, resistance. If you're above it, it's support. If the price action is above it, it's support. If the price action below it, then that line would act as resistance. And so you can kind of see what that looks like when I draw these intraday support and resistance lines. And so you just want to keep an eye on your trades as you start to approach those lines. You want to keep an eye on your trades when you approach these extremes of the Keltner channel, and those key levels that you've already drawn out, these horizontal lines for support and resistance. Okay, so one more thing I'll mention, and then we will conclude this video because it's already going longer than I had anticipated. So I also mentioned in the chat that I use the VIX. So this is the volatility index that I use, and I like it because it sort of gives me an early indication of what I can anticipate the S&P would be doing at the same time. So the S&P and the VIX, they trade opposite each other. You don't have to believe me. Take my word for it. You can just, grab, two charts side by side, put the VIX on one, put the S&P on another, go back in time as far as you want to go, and just look how the price action moves on SPY relative to if the volatility index is decreasing or increasing. And so today we saw at the open, the VIX moved higher. And so if the VIX is moving higher, what's SPY doing? So SPY is going to be moving lower, right? And so you get one big red candle there. And you can see that sort of corresponds with this price action. VIX moves higher, SPY moves lower. So let's see what the VIX is doing when SPY does this big move to the upside, right? And so we can see that VIX is doing this. Okay? My special effects. But if the VIX is moving lower, SPY is moving higher, right? And then for most of the rest of the day, the VIX just sort of grinds higher, grinds higher, grinds higher. As the VIX is grinding higher, what is SPY doing? What should you anticipate SPY doing? Your answer should be moving lower, right? And so you see that. So the VIX is moving higher. SPY moves from this high of 425.50 pretty much all the way down to 415.80. Okay? So that's consistent. So you can go back in time to verify that, but just trust me when I say the VIX moves opposite of SPY and vice versa. So I use it as a clue and a confirmation that I'm on the right side of the market and I'm making the right trades. Okay? That's all I got. So you should be able to listen to this in 20 minutes or so. And then if you got any questions, then that becomes an opportunity for us to discuss in the chat. And hopefully we can answer those questions and everybody can benefit from it. But for now, it's going to be a wrap. So drop your questions in the chat and I hope this was useful. Thanks.